Welcome everyone, this is your Market Search Daily Trade of the Week. We want to go short the American dollar USD versus the Norwegian Krone NOK USD versus NOK. The idea for this, there are a couple fundamentals aspects that I want to take a look at. Also, I will go into reviewing Hawkeye Traders, our volume price analysis tool that we apply via charting at TradingView. And finally, I will show you exactly step by step the risk reward, more managing your risk into this trade. And also we'll discuss a little bit of AMB AMRO. We have their 2019 forecast and how we are going to position ourselves into that. And as a bonus, at the end of this video, I will show you the step-by-step how to use Fibonacci, trend Fibonacci, to add entries, re-enter the trade, and also to have an idea how low we can go at the same time that we use the investment bank's ideas into this trade. Once again, my name is Jose Ricardo Tejaen. I'm the editor of the Prosperity Digest newsletter and product specialist at Market Search Daily. Please keep in mind that all the video content is for educational purposes only. We understand that you're looking for trade ideas, you're looking to make more money than anything that banks are giving you, whether you are in the US, Canada, Singapore, Spain, or in South America, Colombia, Central America, Mexico, El Salvador. We want to thank you for watching our videos. Plus, please remember, we're not financial advisors. We do help based on our experience in hedge funds or working in the financial industry for the last 20 years. We reflect in our experience and we guide you to manage your risk. That's the most important. We'll never get tired to say the worst trading strategy or investing strategy will be very effective if you add risk management. Having said that, just one more thing. Remember, past performance does not constitute future performance. We're ready? Let's go. So we're going to take a look right away. We're going to go into a little bit of fundamentals. We have to set ourselves to success. You have to set up everything in a way that you can win. To do that, what we have to do is to understand that right now the policy rate is at 1%. For the Norges Bank. This is the website, Norges Bank. This is the CB, central bank in Norway. And we're looking at June 20, so we have plenty time and we can expect some volatility as the US dollar, it seems that is crashing a little bit. It's getting into corrective move, but we can never discount that it can actually expand itself and visit one more time the 98 level, maybe a little bit more, 98.50, depends. There are some analysts sharing that on the FinTweet space, financial tweeters. Now, what we do expect is an increase in the interest rate, and if this collide with the fact that the Federal Reserve is about to reduce interest rates, then you can see how this can be an advantage. And the Norwegian Krone is not a currency that has a lot of liquidity, not as it is right now. So it become very expensive, and in Europe, Nordic players, we're talking Finland, Sweden, Norway, Denmark, they can right away go into looking for that carry trade. And if that happens and there's a balance, this will be the upcoming currency to buy. And also you may throw a little bit of a possible reversal, heavy reversal in WTI, that's oil. So keep that in mind. So we look at that, that's a fundamental. So just to take a few notes as we go into this trade of the week idea. Trade of the week, short USD. And then on the fundamental, June 20, Norges Bank, probable hikes. And then on the other hand, on the other hand, Fed goes neutral, probably not if they don't cut, neutral to cut rates. That's your fundamental. Bonus factor to add to the equation, WTI reverses, heading up to all the way up to, surprise, surprise, $70 range. So it's not impossible. Actually, it can be a V correction. V, more like a W correction. And I will explain that a little bit as well in this video so you have an idea what that means. Now, we have that fundamental. We have two situations. Again, monetary policy. Monetary policy, and then we have the asset that correlates with the currency. So those two factors are in play. And one more thing to add, it's US dollar index, deeper pullback. And the question is how low. So keep that in mind. That's what we're looking here to assess. And this is why I want to take this trade. I thought about it, had it that last week. I was a little bit busy, so I didn't put it out. I traded a couple times. I lost probably initially $1,000, but which I covered with my short on the US dollar Canadian. It's a video that will wait at the end of the video, will be available to you. Also now we analyze that fully with Hawkeye traders volume price analysis tools. It will be at the end of this video. You can take a look at I actually double one account, and also I have another simulation to show you exactly different trades. Now remember that most of these ideas, what we're looking is if you were to have $5,000, 5,000 euros, 5,000 pounds risk capital, we want to answer the question, where do I allocate them? Or in simple words, what do I buy or sell? And that's what it is. We want to make money. That's exactly the point of these videos. I want to guide you. It's beautiful to tweet, to talk, and that's great. I do respect that when a lot of professionals are tweeting this amount of points. The question is, if you go for the idea, what's the drawdown? What is the pain? Because there's a little bit of pain in investing. Well, a lot of pain at some times. So that's what we want to look. Now, we have all that fundamentals. Also, if you do a tweet on Google, a research, Norges Bank, you have a couple articles, 17 hours, 18 hours, 7 minutes ago. And for example, this one published by FX Street, strong domestic figures argue for higher rates. That's absolutely, it's to the point. This is the reason why BOC, Bank of Canada, didn't cut rates, because they were pretty stable and they want to use that when they're against the wall. If you take a look what happened with the Reserve Bank of Australia, on that side, what they did is like, okay, we cut, but we want to see how the market reacts. And of course, there were two sides. The side is saying, well, they won't cut, they cut, but after that, Philip Lowe, central bank governor of the RBA, basically, he doesn't give clues into the future, and that's exactly what happens every time. That's why you see that the Australian dollar is going up at this moment, plus the dollar index is moving lower. That's the idea. Now, having this information, what we want to do is now take a look at Hawkeye Traders volume price analysis tool, and what I want to do, I have my trend stops in aggressive mode. We have the volume pack and also have heat map. Heat map is still green. I suspect this will change soon in the next at least 2 weeks, start going red, opening doors for a pullback retracement, 867 at the moment. And the first thing I want to understand is, where are the stops? It has been a comprehensive tool, very supportive in giving me the idea where are the stops here. We're looking at 877, and after that, massive at 886. This is what I will be using, one for my initial trade on the second trade, and how I manage positions and how you can do that from the very beginning. So we will be using not the high of the day in our notes, because I will execute in MetaTrader 4 a simulation for all of you. What if you were to do this? And you can judge that in the future, how you manage your risk properly. I will be targeting the next level stops. That will be 849. Now, the thing is that this year, the level 844 has been the support at a certain extension of the initial pullback back in January. So that's something to consider. I always start with a monthly chart. If you take a look, this June, we already have 6 months in the year. Take a look where 840, that's the support of the year. And I suspect that as soon as we break to the downside, these stops at 849, then we have another barrier, another critical support during 2019, and when that is gone, it's game on for the Norwegian Krone, and that will be bye-bye US dollar. So that's what we're looking at. Of course, as I said, once again, I repeat, stops allocated at 877, and the second barrier will be at 887, 888. Now, we have this information. I'm just going to take a look in the lower time frames because we have positive volume. On the volume, what I have to indicate, price analysis, you can see there's a little bit of peak of a volume, then this massive drop. It was still in June. It's pretty decent. We have professional selling to the left. Let's go lower to the daily time frame, and absolutely we can see how slowly has been going lower, but massive selling the last couple of days. Massive selling, professional selling, red selling, sellers are in charge, green buying. And one thing I want to add is the live data that we're getting on this volume comes from Rwanda. I have tried the ones from Saxo. I don't know why it's not working, but this is the information we're getting. Now you can see how the last week 880 was again 879 was the level that was protected. It's basically saying the market professionals, the smart money, they're saying we don't want these exotic, and we consider this an exotic. It's not really a US per se. You can think this is basically the level that smart money is telling us we don't want something above for the time being. So we're going to play with this range. This is the price rotation so far. It will go all the way down to these stops allocated at 862. That will be very important to see what happened, how low it can go once we break this barrier. Now, I want to go to MT4 and start playing with, I remember we have it at 877 and 882 estimate. Let me just go back one more time. The monthly chart, we're looking at the allocation of the stops, 886 and 877. Perfect. We go now to the MT4. I'm going to switch and start working a little bit with more views for you to understand what exactly I want on this trade. I have the exotic here from a chart. I'm looking at the monthly chart first. If this is in fact my high, this high, let me take this high. This is the high that I'm working with. It's 882 all the way December 2018. Then if we apply Fibonacci trend only in this rally, comes from 762. The first level to consider is 854. This is the one, but of course we know 840 has been playing around, which is not too far from the 38.2%. Keep in mind the two levels to consider all the time they're working with Fibonacci, trend Fibonacci, 38.2% and the 61.8%. That's all that matters. Sometimes you have the in the middle 50. That's great, but these are the two levels that you have to pay attention. So that's exactly why the rebound in this case, you can see from January into February, this has to be January, there you go, February. This rebound comes all the way from the 38.2%. That's what the market's saying. Now, it still looks like it may be an opportunity to go long, but once you get to the zero, this is really what you have to wait for the Fibonacci to be activated. It didn't happen. It can come back, crash the party, and go all the way down. That's what I'm expecting. So I'm positioning myself for a fundamental shift in central bank policy. Monetary policy that comes from an increase in Norges Bank and a rate cut or fully neutral Federal Reserve, not hiking anymore, and that's what we're looking for. So we're positioning ourselves. Now, having this, I also want to take a look at what is happening in short time frames. In the short time frames, we're looking at the 4 hour. I'll go all the way down. Before I add the 50 exponential moving average, I'm looking at the different Fibonacci levels. This is extension, this is the rebound, it goes down. Now we can switch. I'm gonna leave this one here, and now I'm gonna take this one and the 50%. It's not too far from the 61.8%, but this is a critical level, and then it goes down. If I were to measure, I'm just gonna do it in a simple way, the way I learned. If I measure the range in this area right now, take this one and say this is the level I'm looking at, then the projection, I'm just gonna leave it up here. Okay, we're gonna take this projection from the 50 then I can say that I'm looking for the 866, should happen in the next couple hours, and then I'm looking all the way to 861 in the 4-hour time frame. But the most important is what I'm about to show you is the 50 exponential moving average. Prices are below the moving average, the exponential moving average. We favor shorts. Now, if I take a look to the daily chart, just keep an eye. This is exactly what is happening on the 4-hour chart. I'm going to delete that. This is what we're targeting in the 4-hour chart. I'm expecting this to happen this week. I'm not entering any trade now. I'm just going to take everything out. We have that. And on the daily chart, prices are about to break to the downside. This is very important to understand, because when it does, you're looking any opportunities of reversals. If it's true that the 866, 861 estimated will be our next level, then we may expect that eventually it can have a bounce all the way to 872. Now, listen, you may say that this is not the best way to use Fibonacci. I'm using a projection. If you watch the TV show from Showtime, Billions, one thing you have to understand is by the time it happens, you're toast. A lot of professionals, what they try to remove, they say we want to go for the sure thing. There's no sure thing ever in trading or investing. At all times, you have to protect yourself. The way we see markets is a factor of pay-per-view. You pay the market money to play the risk view. We work with risk scenarios. And yes, we can say you potentially have the probability to make $7,000 or $8,000 or XYZ amount when you're about to trade Forex or you're in stock trading, futures trading. But the most important at the end of the day is you're playing with risk, like playing with fire. And you need to know what you have to do. So I'm just projecting an hypothetical idea that I already have, what I know based on on a strategy, trend Fibonacci with a 70 and 75% and more success rate, how I'm going to play my risk, not only where I would like prices to go. So that's the pullback that we expect. Could it keep going lower without any stops? Yes, it can just crash and that's it. But we're still away of 20 days from finally see if Norges Bank, that's what is on the table, that they will hike rates. We'll see how it goes. Now, I have all this information. Let's go to the monthly chart and let's begin what I want to do. Again, this is the area where I'm working. This is my risk. Let me take shape. This is where I'm working with. In the short term, this is where we're playing. This is the lower band. If it breaks, definitely we're going to hit 806. This will be our target for 2019. As long as there's no break of the previous high. And the previous high, we have it here back in January, we have 878, this one. This is the one that we're looking to work with, 881. We know that stop losses based on Hawkeye traders, volume price analysis are set at 877 and above that. So this is where we're going to play. The last thing I want to mention before I forget is, let's take a look at the long-term view and something very important to understand, what we call historical levels. Now, the historical levels are not just a common 4-hour daily or weekly chart. These are key levels that have been positioned for years. And remember, whether you like it or not, it's not about past performance repeating. It's about markets having memory. I repeat, markets have memory, and we have to play with that. We have to play with that essence. Now, look to the left. What do you have? You have all these levels here. Take this particular one back in 2002, March 2002, the low 870. So if you take that and you go with the projection, you know it's 870. What is the price doing right now? Prices are breaking below the 870, which is a historical level, historical support. You have it here as support. Now it will turn into resistance. And remember what we did with the Fibonacci, the projection? Exactly. The 61.8% eventually will be 872. So if you're looking at the historical level all the way from March 2002, the market's telling you that this area will now be extremely resistant, plus the resistance that we have in the last 5 months. So that's a very important combination. Look at it once again. This is something that you can do yourself. The low, you have low, this one right here. Okay, here we go, March. Low 870.32. That's the low. Markets have memory. What happens will tend to happen at some point. So now this support will come here. You see how powerful was the breakdown? Look at that. 3 full months. Different scenario, 2001. Now we know that as we expect prices, gravity will bring all that back to 806. That will be our target in 2019. Now, before I jump, real quick, one more thing. This is ABN AMRO forecast. This is the latest update for March 2019. Look at it. US dollar versus Norwegian Krone. We have it 2.8. In 2020, 6.8. There's a lot of money to be made in this trade, but you need to position yourself. We got it. ABN AMRO latest update for forecast. USDNOK 7.8, 6.8 in 2020, 2019 7.8. I'm expecting at least in the next 4 months. I'm looking 806. Depends on exactly how it moves and how I accelerate. But if I take a look at what happens when prices crashes, show you one more time, 686. We can say this one here, 686. If this is the opportunity, there you go, 686 around, yeah, around 807. So around 2-3 months, this is what we're looking for. This is the time frame for this short. Time frame for the trade, duration will be 3 months. Okay, that's what we have, and let's go and see exactly what is going to happen. Now, so Hawkeye traders will be 877. 882. Let me take one more look at that. The last one, 886 actually. That's where the market, the stops are based on the data we're receiving from the indicator and also everything we're collecting from Oanda. Now we have that information, and I'm gonna start first. I take one trade. I have my first trade. I'm now gonna remove this horizontal line and go for my first trade. Let me just remove this. Perfect. I have my trade at, let me see, we have the terminal. Okay, 884 stop loss. I'm not gonna go that low. The first trade, let's see, I want to close it once it breaks the support. Remember 837. Let me zoom. We're gonna take Fibonacci. Take Fibonacci. We have it here. 835. Let me zoom here. Okay, the 38, 836, 837. This is the first one that it will touch and then break. And then I want to enter a second trade. And of course, keep in mind that you can do this with 0.5. Half a standard lot. You can be conservative. You can be a conservative investor and follow these ideas. A measure based on your risk profile. Remember, we're not financial advisors, so you have to measure this for yourself. And now I want to do the second trade, and I'm looking the 50 EMA target, and that's it. And we're looking at 806. And that's it. We have our positions. Second position, one single trade. We're looking at about a little bit 100% of your money. Double your account with that in a high yield trade. And I'm looking about 75% of my money on the second trade. And that's how I do it. Now, of course, as I said before, what if I have $5,000, 5,000 euros, 5,000 pounds? And I'm looking for a trade idea, an investing idea into 2019, and into the second half of 2019. This will be my trade, my trade idea for one of the many trades ideas we'll be publishing this week into the second half of 2019. First half, a little bit of mixed feelings. The dollar very strong, overvalued at 12%. We know, historically speaking, that after 12%, overvaluation, it goes down at about 350 to 6.46%. That's my rate. US dollar, just add more information into this video for every one of you to have. US dollar overvalued at plus 12%. Probability indicates going down at least minus 350 or lower minus 6.46% from current levels. Well, actually from 98, so keep that in mind. From highs, 98.37 estimated, 98.20. Those levels. So that's very important for you to have. So this is the short idea in the US dollar versus the Norwegian Krone, USDNOK. We have seen how the levels are based on Hawkeye traders. Volume price analysis. These are the location of the stubs. That's what I'm using for my levels. As far as understanding my risk, I'm going into risking almost my entire account in a high yield idea if, again, I have risk capital of $5,000 into the second half of 2019. As I said, I'm looking to break the low of 2019. That will be my first target. I'm using trend Fibonacci to establish potential short targets. We went over the 4-hour chart. You can rewind a little bit of the video to go over that. Also, I use a projection understanding the level. I also share with you exactly, if we're looking in the long term, the value, how the market has memory, and using this level from March 2002, that's 18 years, almost 18 years estimated of data, probably 17 years of a level that's very important. That's the 870. So if we have any retracement and you want to re-enter positions, I will look to re-enter positions at a historical level, 17 years, 870. And keep in mind that 872 will be that 61.8 Fibonacci level that we're looking into the daily chart, if I'm not mistaken. So those are our notes. This is the trade. This is once again the two positions I'm looking to target. This second as well, I will have it at 884. We know where are the stop losses. And this is the trade idea, the trade of the week. This is also a very comprehensive idea about investing your equity capital, risk capital into the second half of 2019. We know where's the US dollar. We know what we're expecting in the next couple weeks from Norges Bank. Remember, the date for the meeting will be June 20th. All indications leads to expect a higher rates. This is coming from Nordea Markets. It's a Danish investment bank. It was published 18 hours on FX Street. You can look it up, see all that information. Now, this is a great opportunity for me to invite you to sign up, subscribe into this channel. To the right here, you have the red button. Please go ahead and subscribe. Let me know what you think about this video. We went over all the details, and we're looking to risk 5,000 risk capital into this trade, one of these trades ideas into the second half of 2019. Once again, on behalf of all the team at Market Church Daily, my name is Jose Ricardo Tejaen, editor of the Prosperity Digest newsletter and product specialist. And I want to thank you for watching and have a great trading week.